And this environment that's never been this bullish on AI, which is an area our next guest is excited about, but not on the names you might expect. Joining us at Post 9 today, Brooke Dane, portfolio manager for Goldman Sachs Asset Management, is back. It's great to have you. Welcome.
Great to be back. Thanks for
everyone, the knee-jerk is NVIDIA. How much more creative can we be?
Yeah, so, it's so early in this wave of AI coming in the marketplace that there aren't a ton of public market vehicles that you can look at and say, that's the pinpoint thing. And as you said, the market's gravitated across a couple big winners. We think, though, two things. First, as we move through this year, there's going to be a lot more companies that you're going to see actually having AI power their business and create higher growth and higher margins. But secondly, there is at least one name that we think in more of the picks and shovel side that the market's missing its leverage to AI. So at companies Marvell, Marvell's core business is doing connectivity in data centers. And one of the key bottlenecks, besides using GPUs, is this connectivity issue. And we think that as the big platforms continue to spend on AI, they're going to continue to invest behind Marvell's connectivity solutions. The other piece of Marvell, and what we think is actually even more attractive, is what they're doing on the ASIC side. And here, if you think about the architectures of the big platforms, it's been heavily GPU-based. They're going to move to a world where they're balancing both GPUs and ASICs. And again, we think Marvell's really attractively positioned for that.
That's interesting. We put cloud growth on the wall as well. What is the thinking? I know you're watching Datadog and Snowflake in the wake of what we heard about AWS.
Yeah. So, as the big trend, obviously, of the past year in terms of the cloud has been optimization. How can people, basically run their cloud infrastructure more efficiently? That's pressured all the vendors in this space. We're particularly interested, though, in the consumption-based models like Snowflake, like Datadog, that'll probably be the first to see any stabilization in that trend and any reacceleration. So, look, Datadog reports this week. There's some reasons why the quarter may be uneven. I think, frankly, every sell-side firm in the world has previewed that, the guidance for the next quarter may be a little challenged. But if your horizon stretches a little bit longer than that and looks into the back half of the year and next year, we really think that the risk-reward is incredibly compelling here. And, this is a business that should see reacceleration, should continue to perform great on the margin side, and really will benefit from the resumption in what we're seeing on the cloud side.
Banks are a huge story today. We know financials are the largest buyer
of tech,
tech and software. Does this make you worry about IT spending at large?
Yeah, so you don't get to be an old software analyst by not being worried about every quarter and understand that there's variability in the numbers. So look, there are some challenges in this particular quarter, right? The fact that the banking crisis started to unfold in the last days of the quarter probably will impact results out there. And we're going to see management teams that execute really well and see other teams that fumble. So we're being very careful and selective in that. One of the reasons that we've taken some profits in names that have come up a whole lot is because we do feel like the variability around this particular quarter is a little bit higher, and we wanted to have dry powder to add back to names where we have long-term conviction in them and think that they're going to continue to be, secular growers with great margin expansion and all the usual things that we look for as a team. But, we do want to be cognizant of the fact that there is probably a little more volatility into this quarter, and we want to be in a position to take advantage of that.